And then about a year ago, we started working with OpenAI to help them think through an idea around how would you be able to purchase directly within ChatGPT. You're already using it to prompt and to discover. And if you go to any retailer or even the Stripe business and you look at the referrer traffic, where are my customers coming from? They are dramatically increasingly coming from these AI platforms. And so it's natural to try to move the execution of a purchase closer to its intention, and the intention is starting to move to these AI platforms.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. My name is Simon Taylor. I am your host for today, author at FinTech Brain Food and head of market dev over at Tempo. And we've got something a little bit different. We're going to jump into all things agentic commerce and agentic finance. And to do that in this mini-series is the CEO and founder of Mesh and a returning guest, now my co-host, Bam Azizi. How are you, sir?
Good. It's a pleasure being with you, Simon. I appreciate it.
No, appreciate you wanting to do the agentic commerce space. I think at some point we should get into your history and why you find that so interesting. You've got a strong background there, but we have a lot to explore in this series. Can you tell us a little bit about why you wanted to get into agentic commerce, given your history, best known now for Mesh and stablecoins?
Yeah, 100%. I think the agentic commerce is going to be the future of commerce. Even bigger, it's going to be the future of finance. The reason is we will have limited number of people connected to internet, like maybe around 5 billion. We're going to have 500 billion agents interacting on behalf of us and on behalf of themselves. So they're going to accelerate the future economy 1,000x faster than internet. So I think we're at the beginning of that and we're just scratching the surface. And it's worth the time to share our insights and also bringing experts like always you do, the best of the best, to share their insights so people can know what's going to happen in the next 5 to 10 years.
Well, and as a primer, we do have possibly the perfect guests for today's show. First up is Jeff Weinstein, product lead at Stripe and prolific poster on X. How are you, sir?
Good. My Twitter profile somewhat is smarter than I am, so we'll see how it's tested today.
Thank you so much for joining us, Jeff. And of course, joining you as your buddy cop duo, as always, is Steve Kaliski, who's principal software engineer at Stripe. Steve, how are you, sir?
Good. Thanks for having us.
All right. Just before I get into the show, I've got to remind everybody that views and opinions of contributors today might be their own and might not reflect those of the companies they represent. And please don't take anything we say as tax, legal, financial, or any other form of advice. And of course, to thank Mesh for making this series possible and our good friends over at Visa. So I'm going to start us off with just a zoom all the way out primer. What does agentic commerce mean? Because I could ask 10 different people and get 10 different answers. But Jeff, you've probably been wrestling with this as a practitioner for longer than most. So what do you view as agentic commerce in terms of the primary payments flows and use cases? What does it look like to a customer?
Yeah. So at Stripe, we're building economic infrastructure for the internet. And if you've used your computer in the last 2 years, a lot of the internet is sort of AI filled or AI mediated or AI assisted in ways that felt like science fiction 10 years ago. And so if you, instead of using a search engine to see 10 blue links, you might ask a question. And so the use of AI in an applied way is just been deployed on society for consumers and business at an incredibly rapid rate. And we see that in all of the Stripe data. And so then, we're starting to move from people using it as a read-only tool. So I ask a question, I receive an answer, I have a little bit of follow-up, text comes back in a chat box, to increasingly write activities. And you're starting to see that obviously hugely in software engineering, where the AI can execute code, write code, deploy code, test code on your behalf. And we're starting to see it in more domains. And a domain that is of great interest to us in Stripe is commerce. And how will AI be able to help people and businesses find what they need, be they products or services, actually be able to execute them more efficiently, and have the foundations to build new types of shopping and business experiences that would have felt again, like science fiction years ago. So that's sort of where we're coming from, and we can get into all the nitty-gritty of agentic commerce and how it applies in each use case. But that's sort of like the high level what got us excited about it.
It's moving from those 10 blue links and going to a website, creating a cart, hitting the checkout button yourself. And there are so many different variations of that experience popping up in so many different ways and so many things being imagined. But Jeff, what I always enjoy about your X posts is you're showing this in production. And I think that would be what surprises people, is that these payments flows are happening today. So just to double click on that, could you give me an example of something that's in production today?
Yeah. So, when we started really thinking about this and building prototypes 18 months ago, we really weren't sure what would be some of the first use cases. And then about a year ago, we started working with OpenAI to help them think through an idea around how would you be able to purchase directly within ChatGPT. You're already using it to prompt and to discover. And if you go to any retailer or even the Stripe business and you look at the refer traffic, where are my customers coming from? They are dramatically increasingly coming from these AI platforms. And so it's natural to try to move the execution of a purchase closer to its intention, and the intention is starting to move to these AI platforms. So we set off to find a way to be able to have people buy within ChatGPT, and we got to pair with the great team at OpenAI to do so, obviously. And there were a couple big problems to solve. One problem to solve was, how does a business express their checkout, right? You can imagine agentic commerce being sort of adversarial towards a merchant or welcomed by a merchant. And there are good reasons for sort of both types of use cases, right? A browser automation could be very welcomed, where also an API call could also be welcomed. And we made the decision with them that we wanted to make this fantastic for merchants to be able to directly express their checkouts in a way that AI agents could buy sort of very directly. So that was one sort of main tenet of the design center. And then another one was, how do you make sure that any payment credential that a consumer wants to use is available inside of these AI platforms, but can be executed directly by the seller? So you're not actually buying directly from ChatGPT. You're still buying from the merchant, but you're sort of mediated, you're assisted by the AI agent. And lastly, how do we make this something that can go from an idea to really scaling? And we want any type of merchant to be able to publish their checkout and their product catalog and all of their policies in a way that any AI agent is able to access with everyone's permission. And so we, again, with OpenAI, co-developed this Agentic Commerce protocol, which is an open standard for businesses to be able to express their checkouts, as well as a bunch of principles for how payments and credentials can work. And so those are some of the things we've tackled, and we got to launch that with ChatGPT a few weeks ago. And Etsy was the first merchant and is already live. You can go on ChatGPT and buy from a US Etsy merchant today. Shopify is rolling out in the next few weeks, and Walmart just announced that they'll be selling through ChatGPT as well. So we've gone from the whiteboard to really like in the browser on your phone much more quickly than I would have ever imagined. And while it's still early days, there is actually code working and transactions flowing.
It's funny. Before we came to record this, I was coming back from London, and I was sitting on the Elizabeth line on new high-speed rail that gets me home. Thank goodness for the infrastructure. And next to me, I just happened upon, and I wasn't intending to peer over the shoulder of somebody, but somebody was using ChatGPT to compare hair dyes. And this is the standard consumer behavior now, is like I go there first. I have that natural language conversation. So, of course, the checkout should be expressed there. But what you've done is you've moved the checkout to the experience, but without losing that merchant link. And Bam, I know that point about being able to accept any payment type is very core to what Mesh is about. How do you think about the different pros and cons from a merchant standpoint in this brave new world?
I think merchants are mostly are going to welcome, because it increases the revenue for them, and they will enable their end users or customers to pay with one new type of payments. So we are like, our mission at Mash is basically enabling anyone to pay with anything that they have. We're just facilitating that. We happen to feel like a stablecoin is going to be the future because it's global. It doesn't have any border. It's easier to access. Anyone with the internet can have access to now another like financial service or financial tool. And I think Agentic would basically accelerate that need, because now all of a sudden agents are interacting on behalf of us. Maybe you want to buy something from a merchant that only accepts the local currency in Philippines. How do you want to pay that? Do you want to pay with Visa card? Do you want to wire? I think stablecoin has a lot of use cases there. I think at the end of the day, same as crypto, agentic commerce would have probably some pushback, but eventually all the merchants would enable that through, as Jeff mentioned, browser automation or API. And the one that explored the API would benefit the most.
Explore away for sure. Steve, talk to me about like how this differs from some of the things you've had in the past. I know Stripe has a number of products that had enabled virtual cards and things of that nature as you were sort of finding your way to this. How is this different mechanically under the hood to some of those other instances?
Yeah, sure. So, I'll give you a real example of Stripe issuing. So, we tend to think of, you or me having credit cards that we use to buy our normal stuff. But virtual cards actually power a lot of, B2B infrastructure, right? Imagine you're booking a flight and, you have a portal where you're picking your flight in the hotel and you're paying there. And now, sort of ironically, the travel agent, but maybe not real agent, is going off and booking the flight with a virtual card, and you're seeing a singular invoice across all of it, but you have individual charges on the card. That works well in these like very bounded deterministic environments where there's the one platform you're interacting with a very finite list of maybe hotels or airlines I'm interacting with, but and then also you're in this context of you're already using a credit card maybe or some other payment method, but the default is that the seller wants to receive a credit card. I think what Jeff alluded to that's important here is in this model where you have a buyer, an agent, and a seller, everyone has their own independent preferences. And you can make the discovery really great of showing a product to purchase, but if the payment method I prefer, whether that's just a personal preference or a geographic requirement to preference isn't available, that doesn't help with the conversion, right? And when you're the seller who's checkout, even if you've tuned it, and written your own API for it, being expressed in that application doesn't convert well, that doesn't help you, right? So being able to make sure that the payment methods that your buyers maybe on your site prefer, and certainly the payment methods that the buyers at the agent application prefer are available is hugely important.
I think it's especially important in agentic commerce that the plethora of the world's payment methods is available for all merchants, because in traditional sort of search experiences, you would get, the first 10 blue links, and then there's a nice kind reminder at the bottom that there are 50,000 more pages for you to review. And actually, maybe the thing that is most personal to you, what you actually want, is on page 38. But you just don't get there. You sort of get the top of the stack of sort of paid and SEO results. But in a very customized LLM, you might get the product that is actually on page 38, and that might be sold from Japan or Buenos Aires or anywhere, and that merchant might be very happy to sell you the good, especially if it's a digital good, right? Happily sell it to you over IP addresses, but they might not accept the payment method you have. And so again, the sort of cross of consumers, agents, and businesses is much larger than what we're used to sort of traditionally going to a single site that's like somewhat geographically preferred. I think that agentic commerce might kind of connect the world faster, and then you're going to need all the payment methods and all of the currencies available to make those connections actually work. Steve?
I want to replay that point as well. There's something, Steve, that you mentioned about there's three different actors in this payment flow. There's the ultimate human buyer, There's and whether they're represented by an agent or not, it's kind of there. There's the agent middle layer, and then there's the merchant, and potentially there's even payments processors behind those merchants. And so they all have a series of different preferences of like, who do I want to buy from? What do I want to get paid with or pay with? How do I like to display this? And it's ultimately the merchant who is going to decide, and they care so much about conversion. I've gone to all of this effort to try and get a customer to consider my product. And if they're just going to walk out the door, all of that effort was wasted. So I want them to convert. So now if the agent is making up new checkout interfaces, then maybe that's not going to convert. If the agent can't offer all of the payments types in the world, maybe that's not going to convert. Maybe it's going to break. If the merchant can't make a decision about, hey, I think this is fraud, then maybe it's going to break. So there you have so many points at which that payment can fail when you've changed it, because it's so simple when I land on a website. But if this is my checkout, but somewhere else. So how did you think about, like, what are the failure modes here and how you start to solve some of those?
I think that's a great point you just brought up, which is in a regular payment flow, I'm going to the merchant's website. They control what I see there. They control the payment method collection. They control the checkout and cart state. They have all the signals that they're seeing, right? Your IP address, your location, behavior on the page. And then they can, on their own or, with vendors as well, make a decision to approve or deny that transaction. And in this case, we've sort of ripped it in two, right? The seller still maintains their payment processing, their cart state, and their backend. But a lot of the almost all of the interactions the human buyer is having are in a totally different application. So you both have this problem of, well, how do I make sure that when I pick a shipping option or I say I want 2 or 3, that's actually what ends up happening with the seller. There's a problem of, I put in my credit card info or my payment method preference. How do I know it got there and it's going to be used in the way I expect it to be used? And then third, for all parties, how do we make sure that the signals that are being collected in that agent's application that would typically inform risk or fraud decisioning get over there as well, so that the seller can have the data that they need to proceed. So for each of those different parts, we had to figure out, how that communication would occur and what the sort of guardrails would be. So at the top is checkout. So that's a big part of the Agentic Commerce protocol is just like, how do I say I want this shipping option or I want one more or, this is my buyer info, so on and so forth. And if we can both speak the same language on the agent side and the seller side, then that can be deterministic, right? So great, check. Then there's the payment part, right? Which is, how do I make sure that I can properly collect payment credentials within the agentic application, secure them in some way to send over to the seller, and then let the seller use it up to the amount that the buyer, in other allowances that the buyer agreed upon upfront. And then even in there, have complex flows like 3DS or step-ups, tunnel back and forth. And then, the fourth part, of course, the third part, the risk side, something we've spent a ton of time with Stripe Radar working on is how do we make sure that the signals that are being collected by the agent can be sent over as part of that payment credential for the seller then to sort of glue their side of risk insights together with to properly process payment. So every step has to have the same language that's being communicated with because it can't all just occur in one account context.
You've sort of split the experience in two. I know marketing teams will hate this, but I really loved that phrase you used once of like quantum entangled checkout. Like it's.
I'm glad you said it. I've been looking for someone else to say that one, and I know Jeff smirks. So it was all worth it just to get that out there.
Just make sure that the state is the same at both sides, right? Like, and there are so many failure modes in payments. This is why my favorite line is payments are easy. It's the edge cases that are hard. Like on the surface, payments are just like, oh, I want to buy this thing for this price. Go process the payment. But it's all of the things that can go wrong before it, during it, after it that are just kind of unbelievable to kind of drill into. So, Bam, I'm interested in your thoughts on what you've heard so far.
Yeah, payments are working until they aren't, right? So I think the checkout as we know, the e-commerce as we know it is dead. We're going to live in a new world that basically everything will be different. Everything will be optimized around agentic, because we won't go and do shopping anymore as a human. Our agents will do, and they will prioritize shops that are easier to shop or easier to pay for them based on the payment methods they have access to, and they don't have any geolocation restriction. They are like global. They go and shop at page 38, as Jeff mentioned, right? So they would go and find the best for you as a human who is running those agents, and they would pay with whatever is possible to pay. And I believe that's where like the stablecoin as a borderless type of payment comes to the picture. But more importantly, not only e-commerce as we know it's dead, it's going to be the new type of commerce. There would be merchants that they're selling a fraction of the service. There would be merchants that they're selling compute. There would be merchants that they're selling like a limited access to certain APIs that they will charge you like half a cent. How you want to pay half a cent with Visa? Or do you want to wire it like to a local currency? You have to find a new method that enables those type of transactions, those type of behaviors. I think that's where the stable coins are coming to the picture, or crypto payment as a method comes to the picture. Again, the consumer can still pay with the Visa card, or gives you the Visa card, or top up their wallet. But at the end of the day, the settlement happens through something that is enabling global, borderless, and also instant type of payments.
We should speak to the Cloudflare guys, because I know they're doing something around X402, and the idea there is that the API key is dead, and that actually you could get something that's more micropayments, and where agents are accessing a digital resource, then actually them being able to communicate and coordinate at a much greater scale is a fascinating idea as we get into that sort of space. But
next guest,
point,
I guess.
like, yeah, no, definitely. But the broader like commerce space of like the rest of GDP is buying stuff. It could be your groceries, it could be a flight, it could be kind of just about anything that you can buy on the internet. It's just about anything you can buy. But if it goes increasingly borderless, it gets interesting. Jeff, I'm interested in what patterns you're observing in like the human behavior, the agent behavior, from your sort of early volumes in this space. You know, is there a particular type of merchant that this is working with? Is there a particular type of payments flow that you're seeing adoption in, and why you pick this space?
Yeah, I think what we're hearing is that all businesses are now facing new channels, and each of the channels is going to have its opportunities, right? An agent can find you anywhere on the internet, but also its challenges. You know, how do I know that it is a good agent that I have permission versus a sort of spam bot that is now looking for access? And so how do you sort of cut the space of all of the world's businesses? It's sort of a deep question, but I think you generally see like are you a direct to consumer business with a high AOV, average order value, like good that you're physically shipping? And in those cases, you know, we've seen some businesses really thrive with very direct new channels, right? There's an entire world of Shopify businesses that find their customers on Instagram that, you know, you just could not have had an efficient way to get those types of D2C customers 10 years ago. And now you can, you know, absolutely be a single person business who sells globally and is able to find their customers in a very niche ways. So I think that we've sort of shown that with every new type of technology and distribution, that there's some new opportunity for businesses, but then there's also a risk. Do you know, maybe your business upsold a lot of subscriptions at checkout. Well, how do you do that through the agent? And so these are the kinds of reasons where we think that the Agentic Commerce protocol is going to evolve to support new business types, subscriptions, usage-based, because we think that all businesses are sort of starting to merge types of business models. You might be you know, a sort of a digital content business doing news, but you also host events. You might sell hats, but also you want a subscription so that you get access to the newest hat. All businesses are going to have to face this plethora of business models, and so they're going to need new tools. And then when we talk to these businesses, they are asking questions just like, how do I physically model my business such that I can digitize my inventory? How do I make sure that my product feed is available for LLMs in a perfectly defined type of way? Even the semantics of how APIs work in the past, where you sort of look up one record at a time, doesn't quite work for LMs, where they want sort of all of your information in context to provide the best solution. So I think you'll increasingly see Stripe supporting, making it easier for any type of business to sort of model what they offer, be it consumer or business, be it SaaS or e-com, and then have one-click style choices about how they're going to publish and price and merchandise that across the board. And as Bam said too, it really depends on what you're selling, because if you're a API business and you're selling something that's relatively cheap, that's mostly just compute, maybe all traffic is good traffic, right? Like, I sort of don't care who called my API. I'm sort of happy to do so in a almost permissionless type of way. But increasingly, we have digital businesses that have extremely high cost on a variable basis because of the LM fees. And so there's really no like one size fits all. And I think that you're going to want some type of platform and open tools that let you pick and choose these different type of business model and connect most safely for each of your business lines.
Yeah, it's interesting to see whether or not like ChatGPT, which is currently the default consumer interface, ends up seeing like a long tail of consumer agents that are also out in that space. And yes, a lot of people, 60, 70% of people might use ChatGPT as their daily driver, but maybe they've got a personal trainer agent, and maybe they've got like a personal shopper, and maybe they've got something else that was crafted by somebody else. And how do you know that that was a good agent? And maybe it is a good agent and you know that because you've seen the agent before, but how do you know that the person that's using that agent is a good human and not a fraudster? I called it the Weinstein matrix a little while ago, that you've got this new 2x2 of like good human, bad human, good agent, bad agent. And how do you think about like the kind of the flows that are going there and where they go? So interested in like what you've seen in that space, and maybe it's too early to say, but if I think Stripe out of anybody is probably positioned to see the emerging behaviors because of how your clients index.
Yeah, good agent, bad agent is really in the eye of the merchant beholder. One person's bot is another person's customer, and so if you're a content business, you might have completely thrived with search index being the sort of the implicit way that an explicit way that you attract traffic, and you receive you track traffic by letting bots on your site for indexing, and then you receive customers or eyeballs later, and that's a sufficient sort of exchange of value that is well balanced. And other businesses see that as against their terms of service, the same exact behavior. And so again, you need to have flexible tools that let individual businesses pick their business model and then be able to sustainably actually execute that on the internet. And that those tools haven't really existed at scale, and you're seeing lots of different new types of ways that they can be implemented. And one of my favorite examples is a startup that was helping in the last few weeks, in which, you tell me if this is an agent or not, but they build software that helps hospitals reorder all of their supplies. There's, hospital needs huge number of SKUs to run the hospital. It's incredibly laboriously complicated to make sure you have the right SKUs at the right hospital at the right time. Obviously, very important to have the equilibrium correct there. They are dealing with hundreds of vendors, some of which are fax machines, phone calls, APIs, vendor portals, and they need a large team of people to even recon, order, process, reorder, make sure everything is in the correct place. Is it agentic commerce to have agents that automate all of the ordering and processing and checking of all those SKUs? To the vendors that they're receiving a robot phone call or a robot-initiated fax or a robot-initiated API, it looks like the regular traffic that they were expecting, but it is being superhumanly charged by AI on the hospital sort of technology side. And so I think, again, agentic commerce is a fun sort of two-word nomenclature for this entire set of problems, but I think that the specifics of how each of these business models are implemented require their own solutions. And so we think you should expect Stripe to have many new ways that agentic commerce is implemented, and because we see businesses, they change their business model, each week, each month as they're finding product market fit.
I love that idea that every complex back office spreadsheet is actually going to be an agent, but it might not look like it to the merchant. And being able to see and know that it could be kind of powerful. Steve, any thoughts on things Jeff had said so far? So you came off the mute key.
I think Stripe in general looks at what developers are doing as often an early signal of what might become normal for others. And I reflect just on like my own usage of these kinds of tools. And I think what's interesting is basically in the course of a year, I went from using a text editor that didn't have billing in it to a text editor that does have billing in it. And that my interactions with that product where I have an outcome I'm trying to achieve, right, which is some text blob being dumped, has a monetary side effect, right? And that I'm no longer thinking in like $19 a month. I'm thinking in like how many tokens of this particular model did I burn, and was the outcome worth it? And if you look at the early more consumer-y agentic commerce use cases today, it's like I still have an outcome that I'm trying to achieve, which is like buying a gift for my friend. It looks really normal, compared to like my entire Jira ticket being completed in one go. But you can imagine over time, consumers become more used to the idea that prompts that they're giving an agent have a monetary side effect, right? Which could either be literally buying the thing, which seems like the base case, versus I need additional data. Back to Jeff's point of read and write APIs here. I need additional data, or I need to affect something in the real world to achieve the outcome. And those have implicit cost in them, whether that's the tokens that are being consumed in the act of doing it, or the actual third parties that are being interacted with to purchase or transact. So it's starting to feel very normal for me in my text editor, spending money as I work, and I imagine it will start to feel more normal for consumers too.
Fascinating, yeah. The per second, per token labor cost of, hey, I'm having a dinner in a few weeks. Can my personal chef and go out and design a menu, get the food ordered, get it delivered to my usual space? Actually, that's burning tokens at the personal chef. It might be burning tokens somewhere else. And that shift in mentality of like, okay, the work before the work is now almost like, giving the teenager the $5 to run down to the store. It's kind of that mental model, but applied. I want to thank our sponsors for a second. When we come back, Steve, maybe you could start to make some of this real for us, maybe show us what it looks like in action. That'd be really, really cool. So before we move on, let's hear from our sponsors that make this possible. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is brought to you by Mesh, the first global crypto payments network. Connecting over 300 wallets, exchanges, and payments platforms, Mesh enables anyone to pay and get paid instantly anywhere in any asset. Mesh makes digital transactions seamless, secure, and universal, fueling the next era of agentic commerce. Learn more at meshpay.com/AI. Thank you so much to our sponsors. Jeff, we were talking about token burning and that being a new mental model for consumers.
Yeah, there's just a new type of utility online, which is token usage. And compute used to be on the order of free, but tokens are not. And so we're just like hearing from these super fast growing AI companies that a major portion of their cost of goods sold is the tokens themselves. And it introduces a new set of problems, which is, a small portion of their user base is very token hungry. And so, maybe 0.1% of the user base might use 60% of the tokens or some kind of extremely
Mentioning no
lopsided.
names, but looking directly at Steve.
Yes, we have our large whales at the poker table of tokens, and if you just think of it, a subscription only business with tiers, you're trying to kind of come up with the best kind of common denominator tier package for the distribution of your usage, and now it is much more lopsided than it used to be, and so we hear businesses asking us for sort of token-based billing in addition to usage or outcome-based, which is I want to charge my customers, X dollars per inference, or I want to make Y% over top of the raw cost of the tokens. And of course, the token costs are changing rapidly too. I mean, you can just, watching Twitter, it's like updates from the model providers, be they new models or new prices, almost twice a day or something like this. So I think, again, we're going to see all the world's business models sort of get more complicated, and then you're going to want some platforms that help you digitize this in some kind of way. And then again, the same with fraud. One of the things that's so hard to sell online is gift cards to a retailer because they can easily be stolen and resold, and they kind of have no owners, and you can use them online or offline. Tokens are also a really fun thing to steal online because they have an incredible resale market. They're just as good as cash. They're very difficult to trace. And so businesses that are in some ways GPT wrappers, which we mean in the kindest, most possible way, sometimes that's said in almost a derogatory fashion, but we think a lot of the world's businesses will be reinvented as sort of GPT wrappers. Those GPT wrappers, one of their core costs are these tokens, and they have to make sure that they're sort of protecting them and only selling them to real customers. And so we're seeing all kinds of new fraud patterns that we're trying to address. So tokens themselves is not exactly agentic commerce, but is a new kind of input in the supply chain to agentic commerce, which needs these new types of solutions.
It's definitely its own payments flow with its own nuances, a bit like gift cards. I love that. I feel like I need to deep dive into that actually and explain it because that feels very fintech nerdery. But Bam, I know you had a question as well.
Yes, my question is like a little bit outside of the topic of token, but in general, we know that the payment providers, they compete with each other all the time. So whomever is the first on the list gets the most of the traction. It's a limited real estate on every website. But agents are kind of blind. They don't care where you're sitting on the stack. So what if there are multiple agentic commerce payment providers? Like PayPal offers the same thing, Amazon offers the same thing. I want to kind of pick Jeff's brain in terms of like how you guys seeing the competition emerge, and is that confusing for agents? Like what would be the preference there if everyone offers the same thing?
Our core design audience is internet businesses, and internet businesses, they like to accept all the world's payment methods, and they want to blindly optimize the black box algorithm of conversion and fraud and cost. And so Stripe sort of exists to make that choice available to businesses. And we think that applies directly to agentic commerce as well, where we want to help businesses sell through new channels of AI agents, and they need to reach all the consumers, and the consumers are going to have lots of different payment methods, some of which are payment methods, again, that the business themselves not natively accept. If I'm based in New Jersey and someone is paying with the third most popular South Korean payment method, like maybe that sale just doesn't happen because I don't know how to accept it from the United States. So maybe Steve can give us a little bit more of a deep dive technically on it, but one of the core principles was to, one, make sure that everything Stripe builds makes all the world's payment methods work, and two, by default, make our offerings payment processor agnostic. And so what we've launched is a Stripe shared payment token is a new API that lets agents be able to securely transfer credentials to businesses to process on their preferred payment processor. And that does not have to be Stripe. And so a poignant example is Etsy, which is the first merchant that went live in ChatGPT. They do not process cards with Stripe. So the first launch of Agentic Commerce with ChatGPT is with a payment processor that isn't a Stripe. And so we really taken it as a core design principle to make this open to all payment processors. And we've recently seen PayPal, WorldPay, and a few others announce their support of the Agentic Commerce protocol because it is, again, as a sort of core design payment processor agnostic. And we can sort of, I think, even jump into a demo to see exactly where that formal, sort of formal, I think, elegance in some way of the design is really, sort of at the software payments layer. And then you can pick whatever payment processor you like.
And I just want to stick an exclamation point on the end of that. That blew my mind when I found out that Etsy was not a Stripe customer and that actually this open source protocol is truly open source and all of your competition can use it, which really does look like genuine open source. One might argue that somebody like Stripe is well positioned if this thing exists to capture market share. I can see that there's a sensible rationale there, but also that this thing needs to exist in order to capture any of that market share. And there's a recognition that unless it exists, it doesn't exist. So, Steve, show us how
really
it works.
It's a networked problem, right? It's a network of consumers and businesses, a network of agents. And when you want a network to exist, it needs multiple parties and ecosystem. And so we wanted that. Again, it was sort of not even a debate internally. It's like, for this to exist, it's going to have to work for everyone. And so that's how we designed it.
I'll just give a quick example of where I think this exists today, which is, when I create any website, I have my meta tags that show the description and the title and the images. And then any application that, whether it's X or other social platforms renders the link, they all know how to render it, right? So, the worst case scenario is we have like 100 different ways to communicate. Like, that's not friendly to anyone. And, the thing that we are trying to do is just like render something. And the equivalent is here, which is we're just trying to make it possible for any seller, independent of their circumstance or the vendors they use, to make their checkout available and process payments, because that's just beneficial for everyone. And then we can build higher order products, on top of that to serve our users directly. So the demo I want to do is actually talking about one of those higher order products, which is what we're calling the Stripe Shared Payment Token. We're in my text editor. This is where all of the aforementioned tokens get burned. In this case, I will be doing it manually, so no tokens were harmed in the recording of this demo. Okay.
And this is why you need to check us out on YouTube if you are listening to the podcast.
Yeah.
He will do his best pantomime.
I'll do my best. Yeah. Okay, so what we're looking at right now is actually a normal sort of pre-agentic Stripe integration. So, I have my seller Stripe account, and I just want to collect $10. So I create a Stripe payment intent. I'm going to do sort of a just generic card here. And I just want to collect and capture those $10. So just as the base case, we're going to run that. So this is back to that earlier point around how, as the seller, I have the checkout page, I'm collecting the credential, I'm processing payments, I'm responding with success. So we can see the Stripe payment intent for $10, it was received, everything worked out as expected. Now, if I'm building an agent and I'm collecting payment info in my application, how do I get this payment method sent over, right? I don't want to just like send a credit card number across the internet. And even if I could, what would I do about the long tail of other payment methods, right? Not everything is just encoded as a 16-digit number that I can pass around. And on top of that, how do I make sure that I'm not just sending a credential over that could be freely used, but could be used up to the limit that the agent and the buyer sort of agreed upon together? So I'm going to cheat. This would be where the agent would come in and write the code for me. But we're just going to add in a little code snippet here, which does two things. First, we're going to introduce the agent's Stripe account, right? So I'm in the AI chat application. I've decided to buy something. I'm presented with payment UI to pick payment methods. So that collection is occurring in the context of the agent's account, right? Not the seller's account. And what I'll do is I will mint a shared payment token that attaches a card or any other payment method I collected from the buyer in my agent's application. And I'm going to say that it can only be used up to $10 for some duration of time, right? So imagine that's the cart total. So now I provision that. I'm going to send that over to the seller. And now the seller is going to process that instead of the payment method that they would have collected otherwise, right? So we'll run that now. So we'll just go through this quickly. So I've minted the shared payment token, right? It has some risk details associated with it. It's scoped to a particular user. So in this case, my Stripe test merchant. It has a limit of $10 and it hasn't been used yet. Now, as the seller, I can look and learn a little bit about that shared payment token. So I can know that the brand is Visa in this case, when it expires, the funding method, but I don't actually have access to the raw credential. And I can see that I can use it up to $10. So in our example earlier, I ran that payment intent against the $10 and I could capture it. So what we're seeing here is basically in just a few lines of code, I can provision for any payment method a shareable token from one Stripe account to another Stripe account and include that with just one line of code change to process into my existing payment stack. Now, let's assume that I applied that $10 limit, but I want to charge $20 now. Right? So some miscommunication occurred, or the seller wanted to maybe charge more than was authorized. So we'll run that one more time. So we can see there's a failure here. So the invalid request of the amount is greater than the remaining amount capturable. So again, the seller didn't have to change anything besides that one line for their payment processing. And Stripe will help enforce the limits that the agent and buyer agreed to upfront. So again, that applies to other payment methods as well. So what's interesting here is we've made it really simple to do that transport of payment credentials for it to work across a variety of different payment methods, because it's just a object ID that's being shared around with limits rather than the actual credential itself. And then Stripe is sort of acting as an arbiter here to enforce what the buyer and agent and seller initially agreed upon, to make sure that the payments that was expected is the one that's going through.
To Bam's point earlier, with stablecoins being a new way that both consumers are holding funds around the world and a growing set of businesses who want to transact, the shared payment token is sort of not payment method specific, and that the stablecoin acceptance that Stripe has launched over the last year, and increasingly the ability to hold stablecoins, works with exactly the same shared payment token, because again, as a principle, it's both payment method agnostic and payment processor agnostic. It's a way of sort of transmuting the intention to buy from the execution of buying. And again, we for Stripe customers who are already using our payment intents API, it is that one line of code change, and you're no longer collecting the payment method directly. You're receiving it from the agent with the consumer permission. And so we think it's a huge unlock to take businesses who have already modeled how they want the world to work, and they just now have a new channel to receive transactions from.
And I think this comes to Bam's point a minute ago, which is to the competitive dynamic. You've made it really easy to do on Stripe. You've demoed how to do it on Stripe, but there's no reason why somebody couldn't do that with another payments processor. So that's a really interesting point. Bam, I know stablecoins are near and dear to your heart.
Yes. The other part that the stablecoin can help is the last part that the logic stopped the payment to go from $10 to $20. That also can be done on the smart contracts, right? So do you see in future Stripe moves toward a more decentralized way of doing it? So there is no trust. There is a smart contract running that part of logic as well.
I would expect that, as Stripe wants to support as many payment methods and payment flows as possible, obviously, stablecoins is a great example with smart contracts of how we would encode that. I imagine other payment methods are going to build similar technology, to do that enforcement on their own, right? Whether that's at the network level or whoever's administering the payment method. So, for us, we want to make it really easy for agents and sellers alike to take advantage of all of the different payment method technology that's being built. And I think stablecoins and smart contracts is a great example. And other payment methods will certainly have something like that.
And we just rolled out recently the ability for businesses, they've for the last year or two been able to accept stablecoin for one-time payments with Stripe, and now they can accept subscription stablecoin payments. And the way that's implemented is through a smart contract where we're being able to pool funds on whatever the sort of cron regular basis is of the subscription, and you can go and manage your subscription on the blockchain the same way you sort of could go manage it in a more centralized way. But again, I think businesses they're facing this proliferation of new ways of accepting money and customers, and they have all these different types of preferences. What's sort of their command central where they can work in fiat and in stablecoins, sell directly on their own business through agents, do their own merchandising, do their own pricing? And is that 48 different independent systems, or is it a set of modular APIs that sort of work across all of these new payment systems? And that's really our focus, is like making these modular APIs that solve each of these problems in the stack, and then businesses, agents, people can sort of pick and choose where they want to use sort of very hosted Stripe services where you do very little work yourself, or use our raw APIs and then kind of embed it into your application however you like.
I think that explosion of new payments flows, that explosion of new ways to get paid to pay, then this new intermediary, it creates this interesting set of challenges for merchants. And yeah, it just gets harder and harder to get paid and to pay. We need to try and simplify that for any of it to work. Bam, your closing thoughts for today?
Yeah, I just want to say, super exciting, Jeff and Steve. You guys are building the future of commerce, one line of code at a time, brick by brick. I appreciate you guys coming to the show and sharing it with the audience. Thank you, Simon.
Yeah, no, I was just going to echo that. Jeff, if people want to find out more about you or the Agentic Commerce Protocol, how do they go about doing that?
Well, the Agentic Commerce Protocol is available at agenticcommerce.dev, which happened to be available as a domain name a week before the ChatGPT launch. So that was good fortune. And then I'm available on Twitter, and I'm Jeff_Weinstein. Very easy to find on the internet.
And Steve?
Happy to plug my Twitter too. I'm just at Steve Kaliski. So if people want to follow me, I guess we can do that too.
Yeah, there's plenty of good demo videos going on over there. And Bam, how about you and Mesh?
Sure, you can find at MeshPay or go to meshpay.com. My handle on Twitter is Bam Azizi with 2 I's at the end. So I'm changing that to make it easier, but for the time being.
Yeah, thank you for having us, Simon. Bam, your questions have always, Simon, we've been chatting over the last year or two on these topics, and every time we get to chat, I sort of fine-tune my thinking on the topic a little bit more. So this is really quite a pleasure.
Any excuse to riff with fintech nerds, I'm absolutely here for, and we'll have many more episodes like this coming up in the not too distant future with some other agentic commerce folks. But we started this one off strong. If you want to keep listening and watching, then go ahead and subscribe. Hit the like button on everything that you've got if you are watching or listening. And if you want to find me, you'll find me at SY Taylor on all of the socials and at fintechbrainfood.com, screaming into the void about agentic commerce, stablecoins, and everything else. Thank you so much for watching or listening, and we will catch you next time. Bye for now.